Hi, my name is BinTI Mama SAUFI. So I will be presenting about the Fraser and Neff Company, which is known as FNN. So this is my agenda for this slides, which is background of the company, SWOT analysis, findings, recommendation, and conclusions. So the first one is company background, which is Fraser and Neff Holdings. Berhad is one of the oldest and most reputable food and beverage company in Malaysia. It's established in 1883 by John Fraser and David Chalmers Neff as the Singapore and Strait Aerated Water Company. Over time, it evolved into FNN, a major player in the food and beverage sector, with an annual turnover of 4 billion ringgit Malaysia. The company is listed on Bursa Malaysia's main board and is Sharia compliant. FNN's primary focus is on manufacturing, selling, and marketing beverage and dairy products, and fulfilling consumer needs at all stages. So their vision is to become the leading beverage company in Malaysia and the regions, which is with a mission to provide quality, innovative products that customers trust. FNN is also prominent in the real estate, publishing, and printing industry. Its operation in Malaysia, Brunei, Thailand, and Indochina, with subsidiaries like F&B Malaysia and FFB Thailand handling soft drinks and dairy. So, in addition, FNN began to expand their company internationally by opening locations in cities like Kuala Lumpur, Malacca, Penang, Bangkok, and Saigon. The company also introduced its iconic 100 Plus in 1983 and renewed its partnership with Nestle in 2015. The next one is SWOT analysis. So for the first one is for S, which is strength. The first one is strong brand recognition and reputation, which is FNS is a strong brand recognition and reputation are crucial for customer loyalty and competitive advantage. The company has built a positive image and trust among consumers through their high quality products and exceptional customer experiences. Its well-established market presence and commitment to maintaining high standards have resulted in a loyal customer base, attracting and retaining customers while reinforcing brand trust and familiarity. Second is product innovation, which is FNN is a leading beverage company that constantly innovates to stay ahead of industry trends and consumer demands. Their innovative approach includes beverage development, packaging, and brand strategies, all backed by rigorous research. They use advanced technologies and a deep understanding of consumer preference to create new flavors, healthier options, and creative packaging designs. So next is for W, which is their weaknesses. First one is lack of popularity of many FNN drinks, which is FNN beverage face challenges in popularity. They are potentially hindering their market presence. Factors like limited brand visibility, ineffective marketing strategies, suboptimal product positioning, and competition from establishment contribute to these issues. So this could result in slower sales growth, reduced market share, and diminished brand awareness for FNN. Next is high level of turnover. In this point is the high employee turnover can disrupt footfall and productivity by requiring continuous recruitment and training, leading to inefficiencies and increased costs in hiring and onboarding processes. It can also result in a loss of institutional knowledge, affecting their decision making and quality delivery. For all their opportunities, so the first one is consumer behavior, which is FNN can adapt to changing customer behaviors due to their high living costs and reduced spending. Budget conscious consumers are taking a more thoughtful approach to shopping, often waiting for sales or special offers. Next is health and safety concerns, which is they need to focus more on the consumer health conscious consumer are increasingly seeking low calorie, high nutrition meals and drinks. This had led to the rise of organic food stores and low fat options in various food categories. Beverage companies are also offering low or no sugar alternatives. The growing aging population present a new market for health and wellness products. So by increase the awareness of healthy options through social media and online news drive demand for innovative product in the food and beverage industry. The last but not least is for T, which is their threats. The first part is changing consumer preference toward healthier alternatives, which is the demand for nutritious, natural, and low-calorie product is increasing, necessitating industrial leadership. So for consumer, their priorities is to focus on convenience and healthier living. Innovation is crucial for sustained commercial success and addressing social and environmental challenges. Furthermore, is regulatory change impacting the industry, which is FNN faces challenges in complying with regulatory changes in the sector, such as labeling changes, ingredient restrictions, and environmental standards. This change may require to revise nutrition information, packaging design, warnings, and disclosure. Additionally, ingredients limitation may necessitate product for to reformulation or alternative ingredients identifications. So the first one is low expected return, which is FNN has an anticipated return of approximately 0.11%, indicating limited growth potential. This suggests the company might not deliver substantial gains, aligning with a low risk profile. Second is moderate risk level, which is their standard deviation is 0.94%, and it reflects relatively low variability in returns, suggesting that FNS performance remains consistent without large fluctuations and is suitable for investor who is seeking for stability. The third point is high stability in returns, which is their coefficient of variation is 0.83 is low, indicating minimal risk relative to the expected return. This stability implies that FNS returns are predictable and exhibit low volatility. So the last one is conservative investment profile, which is for overall, FNN appears to be a conservative investment with steady, low risk returns likely to appeal to risk averse investors who prioritize reliable, stable performance over high returns. Next slide is for recommendations. The first one is product innovation and health conscious options, which is they need to focus more on expand healthy choice because with consumer is increasingly focused on health for now. FNN could continue developing like low sugar, low calorie and organic options. Next is like a functional beverage, which is incorporate functional ingredients like probiotics, vitamins, and natural antioxidants to attract health conscious consumer. So second point is strengthening digital and e-commerce channels, which is they need to optimize online sales. It's helped to enhance partnership with e-commerce platforms and improve FNN's direct consumer sales channels. Furthermore, use data analytics for consumer insights, which is analyze consumer behavior to personalize online offerings and marketing. Third point is enhance brand engagement and digital marketing, which is do an influencer marketing. For example, like they collaborate with influencers to connect with younger consumer on platforms like Instagram, TikTok, and YouTube. Next is transparency and storytelling, which is share the brand story, particularly around sustainability and product quality to build consumer trust and loyalty. Next is conclusions, which is FNN has successfully positioned itself as a reputable and impactful entity within the food and beverage sector, recognized for its commitment to quality and its ability to adapt to the evolving preferences of consumers. The company's robust market presence, dedication to innovation, and emphasis on sustainability have been pivotal in fostering its success and durability over time. To ensure continued growth, FNN must persist in its evolution in light of health trends, technological advancement, and environmental obligations. So, by aligning its strategies with these critical areas, FNN has strategically equipped to uphold their legacy, promote future expansion, and contribute positively to the community itself. So, that's all from me. Thank you.
Hi, my name is KIRTHIGA. Today I'll be presenting my financial assignment 2. So the company I chosen is Kuala Lumpur Kepong Berhad. So the first slide I will be moving on to agenda, which is five agendas: background of the company, SWOT analysis, findings, recommendations, and conclusions. So for the moving on to the company background, Kuala Lumpur Kepong Berhad has 6 main things, which is plantation, oil and fats, property development, sustainability, global presence, and financials. So for the first one, major producer of plum, which is CPO plum kernel oil in Malaysia and Indonesia. Oil and fats through K oleo producers, Olemaker edible oils, PRFC, and more. Property development shows that develops resistant commercial and mixed-up properties in Malaysia. And also for sustainability, committed to RSPO standards, reducing reforestation and ensuring fair labor practices. And for global presence, there are operations in Malaysia, Indonesia, Europe, North America, and Asia. And for the last one is financial, which is listed on Bursa Malaysia. Strong financial performance driven by palm oil and business diversifications. So for the SWOT analysis, for the first one is strength. Strength is showing us that the leading palm oil producer in Malaysia and Indonesia, strong financially, consistent growth, and solid dividends reduces dependence on oil palm Plum oil, and also certificate applying to the eco-conscious consumers, strong brand, trusted to reputation in the industry. And moving on to the weakness, independence on palm oil prices to the price functions, limited diversification outside plantation sector, environmental regulatory challenges, security over sustainability priceless, which is also called the labor investigation relations of migrant workers of not issues. And moving on to the opportunities, sustainability palm oil demand capitalize global for eco-economics trends, which is strategic expand through the new markets. And also growing property demand capitalize on real estate growth in Southeast Asia. Energy focus invest in green energy. And the last one is threats. Community Malaysia price volatility, exposure to price fluctuations, environmental concerns, a tighter regulation, which is impact of extreme weather of plantation yield tax. And moving on to the findings, Kuala Lumpur Kampung Berhad is a major Malaysian focused on palm oil production, large global player, which is sustainability committed to the suitable palm oil and zero dystrophications, and the financial strong performance driven palm oil prices but impacted by the price functions. These are the findings I'll be presenting to the KLK. And moving on to the recommendation, there are three main things, which is engage non-plantation diversification, focus on climate resilience, and strategic global expansion. So the first one is shows that inverse moving property development and retail to reduce reliance of palm oil, and also the focus on the inverse in climate resilience agriculture practices to the impact of extreme weather. And the last one is pressure partnership emerging markets, high growth sectors renewable. So that's all from me, and the conclusion is KLK is leading player in the global palm oil industry with a strong track record with the property development and sustainability initiatives. Palm oil provides a solid foundation. KLK must manage a risk related to the palm oil variability. So that's all from me. That's the company I chosen, which is KLK Kuala Lumpur Kampung. That's all. Thank you.
Hi, my name is Siti Elysha, 012024070300. So I will present about company Malaysian Airports Holding Berhad, MAHB. It was established in 1992 and became a publicly listed company in 1999. It managed 39 airports across Malaysia, including key hubs like Kuala Lumpur International Airport, KLIA, and has expanded its operation internationally, notably with a stake in Istanbul Airport. As a government-linked entity, MAHB plays a crucial role in Malaysian economy by overseeing airport operations, commercial developments, and passenger services. The company is also focused on sustainability and innovation, investing in smart airport technologies to remain competitive and enhance the travel experience. MAHB continues to be a key player in the region's air transport and tourism industries. Malaysian Airports Holding Berhad enjoys several strengths that position it as a leader in the airport management industry, including a robust network of 39 airports in Malaysia, with KLIA, Kuala Lumpur International Airport, serving as a key hub in Southeast Asia. The company benefits from diversified revenue streams, particularly non-aeronautical income from retail, parking, and concession, which helps stabilize its financial performance. Additionally, MAHB enjoys strong government support, aligning its operation with Malaysia's broader economic goals. However, MAHB faces some weaknesses, including a high dependency on passenger traffic, making it vulnerable to fluctuation in global air travel. The company also faces substantial capital expenditure requirements for airports infrastructure and operations, which can affect short-term profitability. Furthermore, MOHD operates in a highly competitive market with major players like Singapore, Changi, and Bangkok, requiring constant innovation to maintain its competitive edge. Okay, so for the opportunities for MOHD include the growth of global air travel, especially in Asia, and the potential for international expansion as demonstrated by its stake in Istanbul Airport. The company can also leverage digital transformation trends such as biometric screening and data analytics to enhance operational efficiency. However, external threats such as global economic instability, potential future pandemics, and rising operational costs pose risks to its growth. By capitalizing on its strength and addressing its weaknesses, MOHD is well positioned to remain a key player in the global airport industry. For the finding expected return, Malaysia Airports Holding Berhad has an expected return of 6.811%, reflecting its performance amidst current market risks and conditions. This anticipated return consider the company's strategic position, particularly at Kuala Lumpur International Airport, and potential growth from increased passenger traffic and non-aeronautical revenue streams such as retail and parking. However, the return is also influenced by external factors such as economic shift, competition from regional airports, and disruption from global events like pandemic or geopolitical tension. While the 6.811% return is reasonable, MOHD faces challenges in achieving higher returns without addressing these risks and pushing forward with its expansion and diversification plans. For the finding standard deviation, Malaysia Airports Holding Berhad has a standard deviation of 1.1123%, indicating a relatively low level of volatility in its performance. Compared to more volatile industries, MOHD returns tend to stay close to its expected return of 6.811%, suggesting stable and predictable performance. While there is some uncertainty, MOHD returns are less prone to significant swings, making it appealing for risk-averse investors. However, this lower volatility also means MOHD may not experience the rapid growth seen in more high-risk stocks. Overall, MOHD is considered a stable investment option with modest risk. So, for finding coefficient of variation, Malaysia Airport Holding Berhad has a 0.1633, indicating a favorable risk-return profile. A low CV suggests that MOHD offers a relatively stable return with a lower volatility, making it a less risky investment compared to stock with higher CV. This stability is appealing for risk-averse investors who prioritize consistency over high rewards. However, the lower CV also suggests that MOHD may not deliver the same high returns as more volatile, higher risk assets. Overall, MOHD is considered a reliable and steady investment option. In Malaysia Airports Holding Berhad, MOHD, so this company is a key player in Southeast Asia aviation infrastructure, with a strong position as the operator of major airports in Malaysia, including KLIA Kuala Lumpur International Airport. As global air travel recovers, MOHD stands to benefit from increased passenger traffic supported by its diversified revenue streams and strategic airport development initiative. The company's ability to generate stable income through both aeronautical and non-aeronautical operations like retail and leasing adds resilience to its financial profile. Despite some market risks such as regulatory changes and economic uncertainties, MOHD's solid financial position and long-term growth prospect make it an attractive investment option. In conclusion, Malaysia Airports Holding Berhad is a key player in the Southeast Asian airport infrastructure sector, with a strong track record in both operational performance and business growth. Through a comprehensive analysis of the company background, achievement, business activities, and SWOT analysis, it is evident that MOHD has demonstrated resilience and adaptability, particularly in navigating challenges such as the global pandemic. The company's diversified revenue stream, along with its ongoing expansion project, presents significant growth potential. Furthermore, calculations such as expected return, standard deviation, and coefficient of variation indicate a promising investment opportunity with a balanced risk-return profile. Despite inherent risks, MAHB's solid market position and future prospect make it a favorable long-term investment. So that's all from me. Thank you.